Hey everyone, thanks for tuning in. The world of high finance is full of intricate strategies that the wealthy use to dodge taxes. From offshore havens to elaborate tax shelters, these methods show just how far the rich will go to cut down their tax bills. Join me as we dive into the top 10 techniques the affluent use to navigate and exploit the tax system. It's a thrilling look into the art of tax avoidance. Number 10. Offshore Tax Havens, the secret hideaways. The use of offshore tax havens is a well-known strategy among the wealthy to shield their assets from hefty tax bills. These secretive locales, such as the Cayman Islands and Bermuda, offer alluring tax benefits that allow individuals and corporations to minimize their tax liabilities. The suspense surrounding how the rich exploit these havens to evade taxes is matched by the thrill of uncovering the elaborate schemes used to transfer wealth to these low-tax jurisdictions. The thrill of navigating the complex world of offshore havens reveals a hidden layer of financial strategy. The rich often set up shell companies or trusts in these jurisdictions to obscure their financial dealings, leveraging legal loopholes to avoid taxes. The use of these havens underscores the lengths to which some will go to preserve their wealth, making it a captivating element of the broader story of tax avoidance. Number 9. Tax deductions and credits, the art of optimization. Wealthy individuals and corporations have mastered the art of optimizing tax deductions and credits to reduce their tax obligations. By investing in specific areas like real estate, charitable donations, or renewable energy, they can significantly lower their taxable income. The suspense of how these tax optimization strategies are employed is coupled with the thrill of understanding the intricate details behind these financial maneuvers. The excitement of discovering how the rich utilize deductions and credits reveals a sophisticated understanding of tax laws. They often employ highly skilled accountants and financial advisors to identify opportunities for reducing their tax burden. This strategic use of deductions and credits exemplifies the calculated efforts of the wealthy to maintain and grow their financial advantage. Number 8. Income shifting, moving money across borders. Income shifting involves strategically relocating income to jurisdictions with more favorable tax rates. This method can include shifting profits through subsidiaries in low-tax countries or using international tax treaties to minimize tax liability. The suspense of how this complex financial strategy is executed is paired with the thrill of uncovering the sophisticated techniques used to achieve tax efficiency. The excitement of income shifting lies in its ability to exploit differences in tax regimes across countries. Wealthy individuals and multinational corporations often use intricate financial structures to move income to low-tax jurisdictions, thereby reducing their overall tax obligations. This practice demonstrates the global scale of tax avoidance and the lengths to which some will go to optimize their tax situation. Number 7. Trust funds, the shield of wealth preservation. Trust funds are a powerful tool for wealth preservation and tax avoidance. By placing assets into a trust, individuals can ensure that their wealth is managed according to their wishes and potentially reduce their taxable estate. The suspense of how trust funds are used to shield assets from taxes is matched by the thrill of exploring the legal and financial mechanisms behind this strategy. The excitement of trust fund management reveals a sophisticated approach to wealth preservation. Trusts can be used to transfer assets to heirs, provide for charitable causes, or protect assets from creditors, all while potentially minimizing tax liabilities. The use of trust funds highlights the strategic planning employed by the wealthy to safeguard and control their assets. Number 6. Stock options and capital gains. Timing is everything. For many wealthy individuals, stock options and capital gains represent significant sources of income. By timing the sale of stocks or investments, they can take advantage of lower capital gains tax rates and defer income tax. The suspense of how the timing of these transactions affects tax outcomes is coupled with the thrill of understanding the strategic decisions involved in maximizing financial gains. The excitement of managing stock options and capital gains lies in the strategic timing and planning required to minimize tax liabilities. Wealthy individuals often work closely with financial advisors to time their transactions and optimize their tax outcomes. This strategic approach to investing underscores the sophistication of tax planning among the wealthy. Number 5. Real estate investments, leveraging depreciation and loopholes. Real estate investments offer numerous opportunities for tax avoidance through mechanisms such as depreciation and various tax deductions. Wealthy individuals often invest in real estate to take advantage of these tax benefits, reducing their taxable income while building their property portfolios. The suspense of how real estate is used as a tax-advantaged investment is matched by the thrill of exploring the complex financial strategies involved. The excitement of real estate tax strategies reveals a sophisticated understanding of property investment. By leveraging depreciation, deductions, and other tax advantages, the wealthy can significantly reduce their tax obligations while accumulating valuable assets. This approach highlights the strategic use of real estate as a vehicle for tax avoidance and wealth accumulation. Number 4. Tax credits for investments, the wealthy's strategic advantage. Tax credits for specific investments, such as in renewable energy or infrastructure projects, offer lucrative opportunities for the wealthy to reduce their tax liabilities. By investing in these areas, individuals and corporations can receive substantial tax credits that offset their tax payments. The suspense of how these credits is strategically utilized is paired with the thrill of uncovering the investment strategies that provide significant tax benefits. The excitement of utilizing tax credits involves understanding the intricate details of how these credits are earned and applied. Wealthy investors often target areas with favorable tax incentives to maximize their benefits and minimize their tax liabilities. This strategic approach underscores the sophisticated planning involved in leveraging tax credits for financial advantage. Number 3. Tax shelters, the elusive financial tools. Tax shelters are financial tools designed to reduce or defer tax liabilities through various investment vehicles. These shelters can include retirement accounts, insurance products, or other specialized financial instruments. The suspense of how tax shelters are used to obscure wealth and minimize taxes is matched by the thrill of exploring the complex mechanisms behind these financial products. The excitement of tax shelters lies in their ability to offer substantial tax benefits while preserving and growing wealth. Wealthy individuals often employ tax shelters to defer taxes, protect assets, and achieve financial goals. This practice highlights the sophisticated strategies used by the rich to navigate the tax system and optimize their financial outcomes. Number 2. Legal loopholes. Exploiting gaps in tax legislation. Exploiting legal loopholes is a common tactic among the wealthy to avoid paying taxes. By identifying and leveraging gaps or ambiguities in tax legislation, they can reduce their tax liabilities. The suspense of how these loopholes is discovered and utilized is coupled with the thrill of understanding the intricate details of legal tax avoidance strategies. The excitement of uncovering legal loopholes reveals the depth of financial expertise required to navigate complex tax laws. Wealthy individuals and their advisors often work tirelessly to identify and exploit these gaps to their advantage. This approach underscores the strategic nature of tax avoidance and the lengths to which some will go to minimize their tax obligations. Number 1. Lobbying and influence, shaping tax policies. The ultimate tool in the arsenal of tax avoidance is lobbying and influencing tax policy. Wealthy individuals and corporations often invest in lobbying efforts to shape tax legislation in their favor. The suspense of how these efforts impact tax laws is matched by the thrill of understanding the behind-the-scenes maneuvers that affect tax policy. By influencing legislation, the wealthy can create favorable conditions that minimize their tax liabilities. The excitement of lobbying and influence lies in its ability to affect systemic change in tax policies. Wealthy individuals and corporations use their resources to advocate for tax laws that benefit them, further enhancing their financial advantage. This strategic approach highlights the power and influence of the rich in shaping the tax landscape to their benefit. This analysis of how the rich avoid paying taxes underscores the sophistication and strategic depth involved in tax avoidance practices. Each point reveals a layer of complexity and intrigue, illustrating the lengths to which some will go to preserve and grow their wealth. Thank you for tuning in. If you enjoyed the content, please hit the like button and subscribe to stay updated with our latest videos on YouTube.